Hi guys. So welcome to the next DAO Tenet. Now we are on the third tenet of DAO, and I hope you've seen the previous videos, guys, because we are discussing a particular topic called DAO theory in our course of in-depth technical analysis for investors and traders. Now, in this third tenet of DAO, okay, DAO observes that primary trends of the market, that is the bull markets or the bear markets, typically the bull markets, they have three phases. One is accumulation, one is public participation, and one is distribution. Now, what are all these phases? Let's see with the help of a chart. So here you can see the chart. I've shown you a really fun chart of Aurobindo Pharma. Okay. Here you can see that there has been a big fall in the stock price. Okay. And after this fall in the stock price, here, let me take the pen. So after this fall in the stock price, where the price fell from 80 rupees to 8 rupees, okay, there is a lot of panic in the market. Imagine your stock fell from 80 rupees to 8 rupees, okay, from in the span of 9 months. Okay. Now, after this fall of this sort, okay, imagine the fear that is there in the market. Okay. There is no sense which is prevailing. Okay. And stocks trade at a humongous discount from their actual value. Now it is at such times when the seasoned investors, they go out there shopping, they go shopping in the market looking for bargains, looking for these abnormally mispriced stocks. Okay. And in these stocks, they start accumulating this stock quietly. Okay. Quietly means that this phase has less interest for these stocks. Okay. There is no news that even discusses these stocks. Nobody discusses the stocks, and um, just the prices are range bound and the volumes are low and the price accumulation continues. Okay. Now, how do you identify an accumulation is that the stock typically is range bound. The prices don't go outside a particular range. Okay, that is one thing. Okay. And another thing that you must observe is that the volumes in general are very low. They are lower than your usual volumes. Okay. These are your two major determinants of a market accumulation. Okay. So once this happens, okay, and then eventually your stock starts moving out of the range. Okay. Now, once accumulation is done, okay, you will see the stock prices going up. Now, how does this actually happen? Nobody will tell you. Okay. Um, so when a breakout occurs, like this is your price range. Okay, your price has never gone outside 14 since this moment here, which is April 2001, all the way till April 2003, your price hasn't crossed 14. Okay. And suddenly it breaks past 14. And you see the volume here on the breakout. You see these volume bars out here. Here, the volume is very less in this accumulation zone. But as the price starts breaking out, you can see that the volumes are increasing. And out here at this particular breakout point, the volume is very high. This means that some big fish, apart from the person who's accumulating, generally the promoter accumulates, or some big investor accumulates, or a big fund is accumulating, right? But when such a volume comes on a breakout, it means that a big investor or a big mutual fund or a FII has invested on the go. He's like, I don't care about the price. I want to buy this stock immediately, right? That is when the price breaks out comes. So this stock which was not trading above 14 for the past 2 years, out here it has gone to the price of 20. Okay, and you can see that out here the price is sustaining, and eventually the buying continues. Now this is a weekly chart, so this keeps happening for weeks. Okay, out here the in the next 3-4 weeks the price goes to 30. Okay, and the stock starts getting noticed by other people. Okay, then it starts getting announced in the media. It starts be going from a discount stock, it becomes a fair value stock, one which is available at fair value. The media notices, good news starts getting announced of this stock, people start buying on the good news and stuff like that, and you can see eventually the stock goes and people buy, and the price goes towards overvalued levels. Okay, now once this happens, okay, uh, you can ignore this candle, but you can see here the price, ignore this one candle here, but you can see that the price went all the way to 46, that 14 rupee stock, okay, which was accumulated from a price of 10 to 14 for all these years. It has gone in less than a year's time, it has gone to 47 levels. Okay, so this is how generally this whole thing happens. Okay, the stock goes from undervalued to fair value, then all good news comes on TV, then it becomes overvalued because people start buying, speculators start buying, retail investors start buying who don't think much before buying. Okay, pretty much they are in fact they will even go and on people's tips and start buying that stock. Okay, so when they are buying now, okay, when the stock gets overvalued and when these people start buying, okay, who is the person who is selling? It is the same person who bought it here, who knew that the stock was undervalued. Now that person knows that this stock is overvalued and they are selling it to all these people who are seeing the news of the stock and they are buying it, right? So ironically, news is old. News is not new anymore. Okay. So when this happens, okay, um, uh, distribution takes place. All these news keeps going on till it's been, the system is doctored in such a way that the news, good news keeps going on, even the stock, even if the stock price keeps falling, okay, the good news will keep going on till all the smart people have exited from that stock. Okay, and once there are no buyers left, the good news is over, the stock is overvalued, nobody wants to buy it. Okay, then the triggers such as the results and all of that stock come out. Those triggers, they depict that the results are not good enough to sustain the prices. That creates a panic in the stock and eventually the stock goes down. Okay, so out here this stock fell from 48 till 26 levels. Okay, and you can see this, that this is another accumulation which took place out here, and that whole cycle proceeded. Okay, and this kept on happening in the stock. Okay, this cycle keeps on repeating. Another example of one such stock which I want to show you is Tata Motors. Okay, I will show you the monthly chart of Tata Motors. So you can see out here also in this monthly chart, here accumulation has been taking place for several months in 2000, 2002. Okay, then the breakout, then the excess phase, then the panic, consolidation. Again, consolidation will have a fall, some accumulation, some rise. Okay, again panic, again consolidation, again the same thing. So this consolidate, accumulation, breakout, distribution and correction, accumulation, breakout, distribution and correction, this cycle keeps on continuing in all the stocks that we see. Okay, now here's what nobody will tell you. If accumulation is taking place, okay, and the volumes are so low, okay, like this. This is a good example of an accumulation. Here the price is forming a saucer-like formation, but along with the price, even the volume is forming some kind of a saucer out here. If you can see this, if you can observe such a thing, it means that the accumulation is even better. Okay, that is another rule for accumulation. One more rule for accumulation is that the longer the accumulation period, the higher will be your target upon the breakout. Okay, right now there's one more stock which is now moving from the public participation phase to the distribution phase. It appears to be, that is Adani. Okay, you can see here Adani has been accumulated for quite a while, then it broke out and then boom. Okay, and this has kept on happening in Adani for quite a while. Every time it happens, accumulation, breakout, boom. So this cycle, if you form a knack of observing this cycle, okay, then it will make a lot of money for you. Try to observe stocks which are forming a saucer, okay, and the volume is also forming a saucer at a very, very low price after a panic. Okay, this will inevitably give you a multi-bagger if that stock is a good stock. Okay, so this was about the third rule of Dow, that is the price. The primary trend has three phases, that is accumulation, then public participation, and distribution. Okay, then again correction, and then again the same thing. So this was about the phases of the market. Okay, and we will go on to the next Dow rule in the next video. I hope you've liked this one, and if you do, then please like, subscribe, and share this channel. It will give us more motivation. See you guys in the next video. Bye.